Go. So welcome everybody. Good to see you. It's been a little while since we hung out. We're way overdue, and I've got a special guest with us today, Mike. We have another Mike. Just can't get enough mics on these calls. We have another Mike, and he's been in real estate pretty much as long as I have, like over 30 years, right, Mike?
Yeah, for sure. Over 30 years. That's what I said. Yeah.
Okay, yeah, we've both been doing this over 30 years, and he's done millions and millions and millions of dollars worth of real estate. Uh, he, I think it said you controlled like $285 million worth of real estate.
Yeah. A number
Wow.
like that, maybe, probably more than that, but
Okay, so that's not too shabby. And he's an entrepreneur, he's an author, he's a real estate trainer, a public speaker, you name it. And I know he was doing a heck of a lot of deals and raising a lot of money. And then something happened and he ended up in prison. And I'm gonna let Mike explain exactly what happened. And now he is back and uh, just showing his resilience because now he's rebuilding his empire all over again. And I just think he's got a really fascinating story. So, Mike, welcome.
hey, Mike, thanks for having me. And I always say it's good to have the same name as the host because then you don't get tongue tied.
Exactly. It helps a lot. And otherwise, at my age, I sometimes forget.
Yeah.
So I have to look at the little square to see the name. But with you, I won't have to do that. So that makes it a lot easier.
Yeah.
So you're in Chicago, right?
I am wishing I was in Orlando today because it was snowing and we have, it's coming in again. So I'm not looking forward to it. That's for sure.
Oh boy. Well, we have some Canadians on the call, so you're not going to get much sympathy from them.
Yeah.
But well, first of all, welcome to the show. Thanks for agreeing to be here. And let's start off with a little bit of your story. Like, how'd you get involved? How'd you get started in real estate, first of all?
Yeah, sure. So first, let me just say hi to. I see a couple familiar faces. It's good to see you guys, and glad that I could be here again. So I've been in real estate a little over 30 years, Mike. I started out as a residential sales agent, and it's funny because I was in the construction business, and I actually was in the swimming pool business.
Hmm.
And you guys that from Canada know what it's like to be in that type of weather and try and run a swimming pool business just a couple months a year. So I was in the swimming pool business and couldn't keep guys working all year. So I'd train them in the spring and they'd leave in the winter and I'd have to train new guys. And it was a tough cycle. It was very expensive and wound up going in the construction business doing kitchen and bath remodeling and then went doing room additions, busy all year long, built a huge company and burned out. I remember waking up one morning. I was married to my wife at the time and woke up and just said, I can't do this anymore. I'm done. So wound up selling the company. Somebody was knocking at my door at the time. I wound up selling the company and took a year off. And during that year, we house hacked. And this is long before house hacking was, sexy or the thing to do. And house hacked a couple of two flats. And along the way, I met a real estate agent. He was really successful. And I went to him and I said, "Hey Todd, I'm thinking about going in the real estate business." And he said, "Boy, I think you'd be good at it." And I said, "Well, he encouraged me to do it." I went in the business and I went to him and said, "Could I shadow you and your team? I've always been of the philosophy that success leaves clues. And if you go follow successful people, it'll cut your learning curve. It'll help you to do well and grow a little bit quicker." So I went to him, asked him if I could shadow him and his team, and he said, no, that he would do one better for me, and he would make me a cassette tape. Now, Mike, I'm really dating us at this point, right? Because I don't think you can find something today to make a cassette tape on, much less maybe listen to one on.
Yes, I remember those very well, though.
Yeah, right. Those little boxes, right? So he made me this cassette tape and I wore it out and I listened to it over and over again. And I followed those simple fundamental principles that he taught me. And I went in the real estate business. My first 9 months in the business, I sold 78 houses. I was Remax Rookie of the Year that year. And I went on to build a team selling 125 houses a year, all listings. and did that for about 10 years consecutively. 2005 came around and the market was starting to shift. And I knew that at this point I would probably have to go do something different because I had 7 people working for me. I didn't want to lay anybody off. I wanted to make sure that I could keep production up. And so I decided to go in the apartment business. And Mike, I always say this isn't one of those things I woke up and thought, wow, this would be a great idea. Is one of those things that I thought about all for a long time. And I had done a lot of work for a couple of large syndicators when I was in the construction business, did a lot of apartment repairs and things like that, and decided to go in the apartment business. So in 2005, I syndicate my first deal. And for anybody who's syndicating deals and trying to raise money, my first effort at raising money was I put a little ad in the newspaper in the classified section. I spent $45, and all the ad said was, uh, real estate investors wanted. And my phone rang off the hook. I wound up raising about $500,000 from that little $45 classified ad. It was probably the best return on investment I've ever had in my life, right? And so I syndicated my first apartment deal. It was 11 units. And I thought, man, this is going to be great. And off to the races. I raised $18 million in 30 months, bought $60 million worth of real estate, about 4,000 apartments in 5 markets.
Wow.
And so, uh, you want to unpack any of that, or you want me to keep going?
Well, yeah, I mean that's a pretty impressive start, and it's really interesting. This blast from the past, classified ads, cassette tapes. I'm going down memory lane here with you.
Yeah.
So yeah, but keep going, keep going. I want to hear more about what did you do after that. So
Yes.
what year are we now? We're 2005.
Yeah, 2005, up through about 2008. 2007 was probably the best year I had. I closed 17 transactions for about 2,700 units we brought on. I also vertically integrated a property management company, so we scaled that and we were managing about 7,500 units. So I really grew this company just shy of $100 million in value. 2008 rolled around, and it was like hitting a brick wall in a freight train at 200 miles an hour. And I would remember sitting at lunch with my CFO, and the news happened to be on, and we were watching people carrying boxes out of Lehman Brothers by the droves. And I looked up at him across the table and I said, "Man, we're screwed, aren't we?" He goes, "Yeah, we're going to be in big trouble." And that was that impending doom coming, right? Not really knowing how bad it was going to be, but that there was going to be some issues. And here were some of the challenges that I faced along the way. I scaled my business way too fast. I brought on too many properties and didn't stabilize them. So anybody who's growing a multifamily or a real estate portfolio today, and you're thinking that by bringing on a ton of properties is a great thing to do, make sure that you're stabilizing them. I thought I had a team behind me that was working the business plan, making sure the capital improvements were done and the re-tenanting and the re-engineering was done, and it wasn't going on like it was planned. So I was unstable as a company because I had a lot of inconsistencies because we were buying properties that were huge value adds, 70% occupancies that we were going in and having to re-engineer. And if that wasn't getting taken care of, the debt was killing us. So we had that issue going on. And I was undercapitalized. I didn't raise enough money. And another thing that I did was I pulled out of my PPMs provision that allowed me to go back to my investors and say, "Hey, we need capital." So I thought, hey, the market is so good, it's so robust that we're not going to see any problems. I won't need to go back to my investors for capital. And that wasn't really the case. And then I was over leveraged. So I was 85% loan to value on $60 million worth of real estate. And I don't know who was more at fault, me for taking the money or the banks for giving it to me. But I would never suggest anybody being over leveraged like that. Matter of fact, today in today's environment, I see a lot of shades of 2007 and 2008 happening. And we're underwriting deals today at 65% loan to value. To become a re-education process for our investors to understand that you're not going to get an upper teens return on your IRR anymore. You're probably going to get maybe a 5% pref with maybe a 13% IRR. And that's probably a place that you need to be. I know sponsors that right now that are even underwriting deals at, they're raising 50% debt, 50% equity, and they're only paying a 5 or 6 pref. That's it. So that's today. But back then I had this over leverage issue, unstable. 2008 rolls around. It's like hitting a brick wall, and I'm coming off the rails, wondering what I'm going to do. So I start to have a bunch of companies that become unprofitable. And what I should have done was let those companies go to foreclosure, let those investors get hurt. But because of who I am, I decide I don't want that to happen. I want to protect all my investors the best I can. So I craft a scheme that says I want to be able to move money from profitable companies into non-profitable companies. I meet with my attorney and my outside legal counsel and or accountant, and they both tell me that is I can move that money as long as I have a note between the companies and I put it back when the markets change. So here was my situation. I was convinced that this was a typical recession, that it was going to last 17 or 18 months, that there'd be a 10 or 12% correction in the market. The markets had bounced back and it'd be like nothing happened. Well, that wasn't the case, right? We wound up being a 7 or 8 year, economic crisis with a 40% correction in the marketplace. Little tough to weather that storm for a lot of people. I know some guys that are still affected by it today. So I start moving money back and forth between companies, which I didn't disclose it to my investors. So because I didn't disclose it to my investors, I wound up being charged on wire fraud and mail fraud charges and sentenced to 10 years in federal prison. Now, um, I, I broke the law, and I just want to be clear on that because of non-disclosure issues. But the whole issue of moving money, that's not a law breaking um, action. So by moving money back and forth between companies and leaving notes, it's an acceptable practice. People do it every day in business. Matter of fact, for what I did and got charged on 5 years before I got in trouble, the SEC would have come in, fined us $250,000, slapped us on the hand, tell us to go back, straighten out our business, and we'd have been fine, right? But now today they put you out of business, they turn you upside down, inside out, and take everything from you. So I get charged with wire fraud and mail fraud charges, and wind up fighting that for 2 years, going to wind up getting sentenced to 10 years in federal prison. And here's what I always tell people. Look, I never flew private. I didn't have a boat. I didn't buy a big house. I didn't drive a fancy car. I was the neighborhood baseball coach. I was the school chaperone, always on the field trips with my kids. I had a great marriage. My wife and I were best friends, and I was home every night for dinner. And I got ripped from that, put in a 12 by 12 room with 3 men that I didn't know or didn't like, had 3 green outfits and 5 pairs of cardboard underpants, wondering what the hell happened in my life.
Wow.
So for the next, I started, walk around wondering what the hell happened. What am I going to do? How am I going to get through today, much less 10 years of this? And I was in prison for about 17 days. And the 2 years, there was a 2 year period from the time I got indicted in 2011 till I went to prison in 2013. I built a property management company that my wife still runs, or ex-wife still runs and operates today. It kept her and the kids in the house. But I built this company thinking, I'm going to come home, rebuild this, we'll take it to $5 million in volume and retire, sell it and retire. And that wasn't the case. I was in prison about 17 days, and she decided that she was going to divorce me, and it wrecked me. And I walked around just absolutely in a daze, wondering what I was going to do. So I walk into gym one day. I'm in prison about 6 weeks, and I walk into gym one day, and I always qualify this and say I was just window shopping. I'm
Mhm.
35 pounds overweight. I came from running marathons to hating myself, wondering, how am I going to get through this? And I walk into gym, and this guy walks up to me and he goes, "Hey," he goes, "cut it out." He said, "Don't let these people beat you. All they want to do is take from you everything you've ever known. They want to ruin you. They can take your real estate, they can take your money, they can destroy your company, they can destroy your family, but what they can't take is who you are and what you're made of. They can't take what caused you to build those companies you built and the success that you had before. That's all inside of you." He said, "Get this 10 years back." And I think we've all had defining moments in our life, right? Where something all of a sudden there's an impact and you go, man, it could be different. And that was one of those defining moments for me. I said, "Okay, I'll take you up on the challenge." I started to go to the gym every day, take this class, started working out, started to get more energy, started losing weight, started to feeling better. I went to college. I went to college for 4 years while I was in prison on a scholarship program. I studied and got a bachelor's degree in theology. I wrote 2 books while I was gone. One's called Exit Plan. You can see it behind me. I'll give everybody a copy at the end of the show. And that it's your complete guide to multifamily investing and why you need an exit plan before you buy. I've spent hundreds of thousands of dollars over the years on coaching and training and books and tapes. And everybody teaches us how to get in a deal. Nobody teaches us how to get out. And I wanted to show people how to maximize your profit. So I wrote that book. I wrote a book on property management. While I was in prison, I taught real estate investing and property management. I wrote an ethics course, taught ethics in prison for 6 years. Pretty ironic, right? Federal inmate teaching ethics in prison. Um, I was on an outreach program. I went into the community. I told my story like 40 times to small businesses, major corporations, and local area college students. And met a professor from the University of Minnesota, and we co-authored a paper together that got published this year in the Business Journal of Ethics and gets taught at the collegiate level for forensic accounting and sales and marketing classes. So I've re-engineered my life, right? Today I'm home, I'm in the coaching and training space. I teach people how to invest in real estate, multifamily specifically, how to scale a business, but live a quality lifestyle, a balanced lifestyle. Because I think in real estate, and I'm sure everybody on this call can relate to this at some point, is we can allow our client, whether it's a listing, a sale, an investor, trying to raise private equity, to control our life, take time away from us. And I want people to live a more balanced lifestyle. And that's really what I work with people on. So I'm in the coaching and training space, and I just got approved by the SEC to go back and be a sponsor and an issuer of deals again. So I'm actively out sponsoring deals, raising capital, and we're doing our first 40-unit apartment deal in Tampa right now. So I'm
Wow.
excited about that. Back in the property management business. So, I always tell people, I say, I think I have this hope and inspiration for people to understand that don't let your past beat you, right? Your past doesn't define who you are or where you can go tomorrow. You can, everybody always talks about the success, but nobody talks about the loss, right? Nobody talks about the defeat that they have along the way, and then the resilience to get back. And that's what I want to share with the world, is that, you know what, you don't have to be defeated. Move forward, whether it's divorce, whether it's loss of a job, whether it's a health issue, whether it's prison. Don't let it defeat you. Move forward and, take charge of your life. So and so today I'm, just kind of trying to share hope and inspiration and lift people up. So
Yeah, that's a great message. So I have a question. When you were in prison, what happened to all the real estate that you currently own? Did it just all go into foreclosure? Were you allowed to run it, try to save it? Like what happened to the real estate?
Yeah, that's a great question. So in 2010, we turned all of our companies over to a receiver. Receivership is like a voluntary bankruptcy. We gave thinking that that would kind of quiet the storm, right? There was a lot of noise. Investors were trying to get capital back, and we had no capital, and there was no returns being paid. So investors started to get really loud. So we thought by doing a receivership and turning all of our assets over to a receiver, which is nothing but legal theft. If you want to go into a business, go into the receivership business. If you can be a court-appointed receiver, you can make a ton of money. Um, so we turned all of our companies over to a receiver, and I was in prison from 2013 to 2020, and during that time, 18, 19, and 20, the receivers sold the last 3 or 4 deals. So I know they had come back a lot in profit, and some of the investors had really gotten made whole, and some things taken care of as a result of that. So
Well, that's good. Well, it's too bad that you still don't own those properties today because they'd actually everybody would get all their money back and then some. You guys would be in a really great spot had that, of course, happened.
yeah.
Uh,
So here, quick story, right? I tell a story in my book of a property I bought. It's a 450 unit deal in Dallas, and one morning I get a phone call from a guy in New York, and he says, "Hey, I just flew from California on the red eye last night. I got back this morning to New York, and I read your book all night." He goes, "Did you really buy that deal at a 13 cap?" I said, "Oh yeah." He goes, "What's it at today?" And I know somebody who just bought that deal that I talk about in the book today for a 4.5 cap.
wow, really?
So, the value of that property has just skyrocketed, right? So,
Wow. So if you could go back in time, what would you do differently if you were starting fresh, knowing what you know now? What would you do?
yeah, so great question, right? There's a couple of things that I would do differently. First of all, I would have vetted my partner better. Now, this is a guy, we were best friends for 25 years.
Wow.
Um, and we did a lot, we knew each other inside and out. And I thought he was a better operations guy than he was. And we would have these conversations in the hallway like this. How's everything going? Great, good. Talk to you later. That was it, right? Because I thought he had my back. And the whole mantra was, I would take a bullet for you. But when it came right down to it, that didn't happen. And so I would have vetted my partner differently. I would have done some things differently with him. I wouldn't have given him 50% of the company. I would have given him, a lot less. The other thing that I would have done was not make some of the hires I made. I grew a company, 138 employees, really fast, overpaid for some staff, and we had a couple of hires that, you know, and I don't think I've ever said this to anybody on an interview, but the two hires that were the worst hires we made were hires that he made.
Mm.
And the three of those people went to the grand jury and testified against me.
Wow.
So, like I was on vacation in 2010, and trust this, guys. I broke the law, and I'm not diminishing that at all. I didn't tell my investors what I was doing, and that was wrong. And for that, I'm eternally sorry, and will do what I can do to try and always make that up to them. But I was on vacation in 2010, and I come back from vacation, and he hands me two business cards, say, "Hey, you need to go find a criminal attorney." And I'm like, "A criminal attorney?" I said, "Hey, I knew we were in financial trouble, but criminal?" I had no idea, right? And because of my attorney and my accountant saying, "Hey, you're not breaking the law, you're doing okay, and it's fine." Well, they didn't know what was going on his side, right? So they didn't have a good handle on that. So, long story short, I wound up, I'm on vacation. I come back 6 months later. We turn our companies over to a receiver in right about that time when I come back from vacation, he can't talk to me anymore because he says his attorney won't let him talk to me anymore. So we have no communication. I haven't talked to him since 2010. And I find out we get indicted in 2011, don't even own the company anymore, right? We get indicted in 2011, and I find out in that was May of 2011. I find out like in June of 2011 that he testified at the grand jury back in August when I was on family vacation. So I had no idea, right? He crafted a deal that gave our in-house legal counsel anonymity or immunity, and gave our director of finance, she wouldn't get charged with anything. And I wound up getting 10 years and he got 30 months. So that's, that was that whole piece. So yeah, there's a lot of things I probably would have done differently. I would have not over leveraged, right? I would have put 75% loan to value on the deals. I wouldn't have pulled that provision out of the PPM. I would have made sure that I still had that provision in case there was a problem to go back and ask my investors for capital. And I would have made sure that we had more money in reserves. There's a spread, right? So when we underwrite a deal saying, hey, there's probably going to be a 10% vacancy factor, maybe 8% vacancy, 3% loss to lease, or vice versa. The market's pretty robust today. Occupancies are up, but make sure you have that baked in. But investors used to ask me, they would say, hey, what's the worst thing that could happen? And I would say, well, the worst thing that could happen is everybody'd move out. Tongue in cheek, I never thought that would happen, right? And damn, it happened, right? People moved out. I got a phone call from a manager one morning that says, hey, I've got 30 moving trucks in the parking lot and I don't have a scheduled move out for 40 days. I'm like, what? So this kind of happened across the board. It happened, mostly in the Ohio Valley, where I owned a good sized footprint there, but it was really heavily regulated by the auto industry and the transportation industry, which were the two industries that got hit the hardest in 2008. And so it was just the instability in the markets just killed us, right? That residential market, I thought, oh man, people are going to need a place to live. Apartments are going to be safe. We're going to be fine. When in reality, I should have prepared for the spread. So I should have had more money in reserves. The more money in reserves would have allowed me to have cash to operate better, and I didn't have that. So so those were really the major issues. So
Yeah. So when you're, I know that you went to legal counsel before you started moving money around, and also you talked to your accountant. Did they tell you, hey, you need to disclose this? Like, were you aware that you needed to, or
yeah,
oh, you
no,
did?
yeah, no, they just said, hey, leave a paper trail, right? And the conversation never came up again. Like, hey, do I need to tell anybody? Or I never asked. Nobody ever said anything. I didn't
Yeah.
know. So
Yeah. Because I wouldn't know either. But I mean, I've never done, uh, had numerous companies where I was kind of intermingling things, but
I,
I wouldn't know that if I actually was set up and my lawyer said, yeah, no problem, just leave a paper trail. I wouldn't know. So did it come as I guess a really big surprise, or did you kind of feel things kind of closing in on you, or what was that like?
um, did what part come as a big
Well,
surprise?
I guess when you were being charged criminally, did that come like just totally out of left field, or did you kind of think, oh well, things? I wonder what's going on. Like, did it start to? Was it a gradual thing, or was it just like sudden one day? It's like, hey, I could face jail.
Well, I think anything sneaks up on us, right? We don't see it coming. You know, so I think I mentioned that I come back from vacation. My partner hands me two business cards, says, "Hey, you need to find a criminal attorney." So I find a criminal attorney, right? I go meet with a criminal attorney, and he says, "Oh, you don't have anything to worry about. Don't worry about it." I pay a guy $35,000 retainer, which was not enough money. I paid him a $35,000 retainer. He says, I don't think we have anything to worry about. I think you're going to be fine.
Mm.
Within 60 days, he was walking me over to the federal defender's office because I was out of capital. I had no money left. and
Wow.
he's saying you're gonna go to prison. So, the whole, did it sneak up? Yes and no, right? Um, I didn't know I was breaking the law by doing what I was doing. Um, so I guess you could say it snuck up, but I still did it, right? So here's one of the things, right? So I always tell people, I say there's five mistakes I really made. One was that I um, I was over leveraged, so I grew too fast and didn't pay attention to the details along the way. So I grew way too fast, very unstable, undercapitalized, over leveraged. Then I didn't pay attention to the details or listen to people around me. So in 2008, I'm closing at the point was the biggest deal that we were closing over about 280 units, and I'm in Cincinnati, sitting in a title office, waiting for my office to wire a $500,000 to the title company so we can get this deal closed. And I'm waiting and waiting and waiting, and I want to just kind of preempt this by saying I never talked to my wife about business, and I never told her anything. And because she always worried, right? But I would say things like, "Oh man, we closed a great deal today," or "I met a new investor," or "This guy's interesting," or stuff like that. Always good stuff, but nothing bad, right? So I'm in Cincinnati on a Wednesday trying to close this deal. My partner finally gets on the phone at like 10 to 5 and says, "Hey, I don't know how to tell you this." Well, you know, I'm waiting. I've been there all day trying to get $500,000 from my office out of the escrow account. They are not wiring the money. And my partner says, "I don't know how to tell you this." And I'm like, "Tell me what?" He says, "I had to move money from the escrow account and put it in the business account." I said, "Hey," I said, "we had this conversation when we went into business 3 years ago. You don't do that." "I know, I know." So I said, "Have you ever done this before?" He said, "No, this is the first time." I said, "Okay, well, let me dry close this deal," which means I signed all the paperwork, made a deal with the title company. I'd have it funded by Tuesday of the next week. I go home, I raise the rest of the money, I give away equity in the deal to some other investors, raise the rest of the money, get the deal closed. But here's the key to this. On That's on Wednesday that happens. On Friday night that week, I go out to dinner with my partner and his wife and my wife. Remember, I don't tell my wife anything about business. She has no idea what happened on Wednesday. And we go to dinner, and on the way home from dinner, she says, "I don't trust him." And I said, thinking I'm a good husband, I say, "Honey, don't worry, I got your back. This is
Mhm.
fine." She wants security. Most women in our lives want security. Guys, pay attention, man, because I said, "I got this. You're going to be fine." And in reality, I didn't have it. I didn't have shit.
Mhm.
And what I should have said was, "Hey, what are you seeing that I'm missing? What's going on that you see that I'm missing?" And I should have let her tell me, because here's what I know today, that they're a lot smarter than we are. And you have a partner in your life, a life partner, because they're smarter than you are. And listen to them. So that's one thing. On Wednesday the following week, I love the women that are laughing at that because it's funny, right? Yeah. On Wednesday the following week, I I'm out to lunch with my attorney, my outside legal counsel, and we're walking from lunch, crossing the parking lot. He puts his arm around me and he goes, "Hey, I need to tell you something." I said, "What?" He goes, "Listen, I don't know what's going on with your partner, but I don't like what I see." He
Mhm.
said, "You need to pay attention to some things." And again, what do? I go, "Hey, don't worry, I got this, right? It's fine. I got it all under control," thinking I'm driving the ship, right? And I'm not. And, you know, what happens is we put blinders on, right? We get so focused on what we're doing. We're running this course and this race that we don't see it. Blinders are okay, but leave them loose so you get some peripheral vision. Pay attention to the stuff that's going on around you, because it's so easy to make a mistake. And listen to people around you. In scripture, Proverbs says a wise man seeks much counsel. And that's one of the proverbs I really live by today, is I make sure that I talk to enough people before I make a decision or move forward in anything that I'm trying to do that's going to impact or affect the lives of other people. And I think we need to do that in business, especially when, I was on the phone with somebody this morning who raises a lot of money and raises a lot of family office and a lot of institutional money. And we had this conversation. I said, look, man, I said, we are held at a much higher standard, licensed or not, series license, real estate license, mortgage license, licensed or not. When you take a dollar from somebody, you are held at a much higher standard than anyone else in the world. And just watch what you do. Make sure you're transparent as hell, and keep your eyes open. Right? You ever see that movie Eyes Wide Shut with Nicole Kidman? And
Yeah.
I always remember that because it's like, man, that's how your eyes have to be. You've got to pay attention.
Yeah. Were a lot of your investors before you went to prison, were a lot of them like friends and family members? And if so, did they get their money back? And if not, what was that like, having to deal with that?
So I've never been one to go to my family and friends. I sold that 78 single family houses when I went in the real estate business. It was not to anybody I knew. When I went into the raising money business, I never raised money from anybody I knew. The only people that had money in my deal was my father-in-law at the time, and then my brother-in-law. Nobody else that was a family or friend of mine. Everybody I met was a past client, somebody I developed a relationship with. I love building relationships with people. So, hey, anybody want to have a phone call with me, call me, we'll schedule something, we'll put it on the calendar, because I just love networking with people and building relationships, because I always want to see how I can add value to somebody else's life, but you never know. Like Mike, you and I, we didn't know where this relationship would go between us, right? And we've
Absolutely.
had
Yeah.
some really great conversations. So it's just, so you never know what you're going to find. Um, so yeah, I had 237 investors, and I maybe knew a handful of them. So um, I did a lot of seminars. I had a seminar in my office every Tuesday and Thursday night for 2 years. I had 20 new people a night in my office on each of those nights. And I taught real estate investing. Anybody ever read the book by Gary Keller called The Millionaire Real Estate Investor? Probably one of the best books I've ever read. And I used to teach the principles out of that book. There was a presentation you could teach, and I taught that presentation and those principles. And people would come, and I gave a book away, and I would teach real estate investing, and then I'd go, oh, by the way, here's a deal we're doing, and people would want to get involved. So
Yeah. Great book. And same with his other one, The One Thing. That's another great book.
right, yeah, we talked about that yesterday. The one thing.
Yeah. Great book. So let's talk about now. So now you're obviously out of prison. You've got the SEC gave you your license back. I'm surprised that, and I'm glad you did, but I'm just surprised that so soon after you were able to. Was that a lot of legal wrangling to get that done, or?
You have to remember that crime was well over 10 years ago. So I got charged in 2011, right? So there's a 10-year piece. Once you've cleared a 10-year point, now you can go back and ask for permission, right? So I had an attorney out of Colorado who worked with me for a couple of months, and we went to the SEC. She got a legal opinion, and I got a blessing. So.
Oh, good. So now, and I know you mentioned that you're now working on a deal in Tampa. Tell us more about that deal.
Sure, it's 40 units. It's 24 two bedrooms, 16 one bedrooms. It's a set of duplexes and townhouses. Big value add. We're going to go in, put about $500,000 in capital improvements into it. Owners owned it. It's mom and pop owner for 11 years. Never put a dime into it. It's run down, beat up. Needs some tender, loving care. I always say we're going to put a little lipstick and a new skirt on it and make it look better. And then re-tenant it. So I think when you look at value add, it's more than just construction or capital improvements, but it becomes the re-engineering. So how do we take this asset that was owner or mom and pop operated for so long and not really cared for, put professional management in place to be able to re-tenant it and recycle out all the tenants. So that's the play. It'll be a 6-year hold. What's funny is we bought the deal at a 5 cap. Today we could probably sell it before we ever even do anything to it at a 4.5, and could flip out of it. But we know where the market's going, or think we know where the market's going. Tampa's a really strong rent growth market right now. I like deals in rent, high rent growth markets. I have an underwriting practice that I measure twice and cut once, just like a carpenter, right? Check and check and check my numbers, double check them. And there's some reports that have just come out recently by the large analytical agencies like Reese and some of the big brokerage houses. And they're saying that next year in 2022, that we should see in that market in Tampa, we should see rent increases of 15 to 17%.
Wow.
In 2023, we should see rent increases of 13 to 15%. And they're predicting in 2024, the election year, that they will probably drop to about 3% rent increases. But there'll be a stabilization there, right, going forward. I think that, we're in an interesting environment right now, and that I'm not an economist, but boy, I love that stuff and I pay attention to it. I get, I don't know, it stimulates me, I guess, today, and it's just kind of interesting, the thoughts that different people have and I just see right now, here's what I see as far as the market goes. I see that the market's really bullish. It's going to be bullish for a couple years. The political environment we have in place right now isn't going to want to see a housing crash. They're going to want to keep it propped up. So the Democrats will continue to prop up the political environment till we get to 2024. After the election, they'll kind of let it ride out. Or let whatever happens, right? Depending on who gets in office in 2024. But here's what they don't want. They don't want to come into the election year with a housing crash and the Republicans to be able to come in and say, hey, see, they couldn't handle it. They let it fall, right? So that's my opinion. I think we're going to see robust rent increases and what you need to look for is you need to look for markets that are high population migration right now. So your markets like Tampa and Atlanta and, South Florida, Atlanta, your Gulf Coast, some Gulf Coast pockets, Dallas, 3 major markets in Dallas, Phoenix. Those markets I think are really high population migration right now, because you've got, one of the things is, Mike, guys turning, men and women turning 65 still today at a rate of 10,000 a day for the next 5.5 years. That's the end of that baby boomer age, right? Coming to an end here. But there's still thousands of people that are retiring and becoming that age and are going to be moving to those markets where, hey, I'm in Chicago. I wish I lived in one of those markets today.
Yeah.
So,
Okay. So I'm going to open up to the inner circle. Do you guys have any questions for Mike? They're very quiet because it's Saturday and they were all partying on Friday. So I think that's what's going on here.
Hey, can I walk away? Can I walk away for 1 quick minute?
You can.
I'll be right back.
We'll be here. All right. Let's see. So Atal, you had your hand up, right? Oh, Atal, you got a party going on over there. What's going on?
Yeah, it's just me and my son here today. My daughter and wife is out right now, so I'm keeping an eye on my son while we just sit here chilling.
Well, that's good, and he's learning some good stuff too, so that's good.
Oh yeah. He wants something to eat though. He's a little hungry.
I know that feeling. I'm feeling the same way.
Yeah,
I always feel that way. That's a problem. And Jonathan doesn't
Yeah.
have any kids with him today, so it's like kind of a role reversal going on.
Right. Yeah. Excellent.
All right,
Yeah.
we'll have Mike here to answer your question in 1 second, hopefully.
Oh yeah. Oh yeah. Yeah.
Here he is, the man of the hour. He is back.
Pretty close. I got a neighbor who was banging on the back door. So,
Oh no, Murphy's Law, right when you're in the middle of a broadcast. So Atala, who's also in the Chicago area, has a question for you. So go ahead.
Yeah. My question lies in those tenant friendly areas. Okay, what kind of systems you got in place to kind of try to do the right thing as far as the tenants is concerned? You know, as far as, you know, getting your money's worth when investing in those places like, you know, Illinois is a tenant-friendly state. What's your take on that? Could you, you know, because I want to invest in a multifamily home in Illinois. So
what I hear you asking is, how do you handle situations where the laws favor the tenants on evictions
exactly.
yeah, you know, I don't invest in those areas. So
Yeah.
I don't, you know, I have a hard time in Cook County, right?
Okay.
I have a much
Right.
harder time in Chicago, Cook County.
Yeah.
Because
Yeah.
a lot of bad experiences, right? Because they just so, you know, you could take a tenant to court and
Yeah.
try and get an eviction, and they go, oh, the pilot light's been out on the stove, they wouldn't fix the stove, and now all of a
Yeah.
sudden they get a 60-day extension.
Mhm.
In markets like Dallas or Texas, markets like Florida, they're landlord friendly. You know, I can have a tenant out of a property in Dallas in less than 30 days. So, um, you know, how do you handle it? You have to be ahead of the curve, right? So if I have a policy in my lease that says you have a 5-day grace period to pay your rent. On that 5th day, if I don't have my rent, they have a 5-day notice in their hand. If I don't have my rent on the 10th day, they have a 10-day notice in their hand, and I'm in court on the 11th day filing paperwork. So, you know, you have to stay ahead of it, right, as quick as you can. Because here's what I have found, especially in a tenant friendly market, is that if they get behind on their rent, they're not catching up. There's a problem in their life and they're not catching up. And as much as I want to be a soft spotted guy in my heart, you know, and say, hey, I understand that you lost your job or there's a problem, I still have a business to run. And the problem is that too many people think that if you own real estate, you're rich. And they don't take into consideration the debt, right? So,
Good. Right. Okay.
yeah, I don't know if that helps. I don't think there's an easy answer.
Yeah.
I think
Yeah.
the best
Go ahead.
answer is just
Go ahead, Mike.
avoid. Yeah. Why would you set up your business in a place where they don't want to, you know, they don't want to take care of you, where they're going to favor your tenants over you? It's like best advice would be to avoid it when you. I mean, it's not like, yeah, you know, if there was no other choices, if every place was like that, yeah, then whatever, you just got to deal with it. But why? You can totally avoid it by just going to other locations.
Right.
Yeah.
But you still you can do flips, you can do wholesale, you can do every other
Yeah.
strategy in your local area. You just don't buy and hold.
Yeah. All right.
All right.
Thank you, Mike.
Yeah, you bet.
Good questions. Let's see. Melanie is typing in the chat box. You mentioned a little bit about what you think may be ahead in the real estate market. I was wondering if you could elaborate, especially as you had also mentioned seeing some current signs similar to what you saw around 2007, 2008. Could that mean a possible downturn again soon? And elaborate on your best guess and what you see down the road for the market.
So, yeah, when I say that I see a lot of 2007, 2008, look how high the market is. when you know, back in 2007 and 8, you could get a stated loan, right? I could walk into the bank, said, hey, I make a $500,000 a year, and they would give me a loan based on that, right? Again, eyes wide shut. Nobody was checking. And not only that, but now they would give me a loan for 125% of what the property was worth. So they would then give me a 80% loan against along with a 20% loan to avoid PMI. So now I'm buried in that property, right? When the market crashes, I'm buried. So if you look at the market today, you've got a bidding war going on in most markets in the residential. So if you have a house that's worth $100,000 and the buyers bid it up to 125, now you're 125% into that house again. If you And now what the buyer is doing is saying, hey, Mr. Seller, if it doesn't appraise for the 125, I'll make the difference up. So now instead of being 125% into the house, now you're 150% into that house. And so there's where some of the problems lie in the market. I think some of the stock market, the P&Es are out of value. I think that there's, you know, the interest rates are so low, the government's pumped so much money into the market just to prop things up. You can't put a Band-Aid on a tourniquet, you know, and I think that there's signs of that. So we're going to start to see interest rates go up here. Now, what'll happen is inflation's going to set in because interest rates are going to go up. How do you offset that as a real estate investor, as a multifamily investor? Is you put more or less debt on a property. So you raise more private capital because it's cheaper money, and you can educate your investor to take less of a return, where the bank is, you know, now you're not indebted into the bank as much. So there's an offset there. Um, the Just try to stay out of being over leveraged as much as possible. Where do I see the market going? Well, I kind of alluded to that. I think that for the next couple of years, we're still going to see a robust growth. I believe that we're still going to see housing prices go up, the housing market go up. When we look at asset classes, from what I'm hearing, and I don't know that I believe this 100%, but what I'm hearing is that multifamily will not be affected this time because it has such a cap rate compression, and that piece of it I don't understand. So um, I was on a call earlier this week with the president of Marcus Millichap, the president of Goldman Sachs, two other multifamily CEOs that have been in the space for 30 and 40 years. And they are saying that the metrics right now, the fundamentals are in very unstable, right? So there's nothing solid about the market. Interest rates are going to go up. One of the things that they said that was very interesting was to pay attention to the tertiary markets and to watch the growth that's happened, that it's a great spread against the yield by being in a tertiary market. So some of the best deals I ever owned were out in the middle of a cornfield. And I'm looking at some of those offbeat markets today to say, you know, this deal might make sense. So because it's out of that primary metropolitan area. So I think that you have to do your research. You have to pull reports and study the market. Make sure that if you are underwriting, that you know, check it twice. Pull a stress test on it. I have an underwriting tool that is, you know, we've been building this thing for 20 years, and it's a really robust tool. I do an underwriting class uh, that I work with people and teach them the metrics, the fundamentals behind it. And what you want to do is you want to make sure that your fundamentals are sound, that if there's a rent drop or there's an occupancy drop, that you're still going to be able to maintain a certain level of income to pay your bills. So you do that by underwriting, but more importantly than underwriting today is look at those markets that are growing and what's causing them to grow. Because if the household income doesn't stay up, you are going to wind up, paddling upstream trying to figure out where to get capital from. So, hope that helps.
Great stuff. Any other questions for Mike? All right. So, Mike, how can we get a hold of you?
You can reach out to me at my website's mycoreintentions.com. And if you go there and do /exit plan, you can download a copy of my book, Exit Plan. You can reach me at mycoreintentions.com. And wherever you hang out on social media, I hang out. So Instagram, Twitter, LinkedIn, both personally and on business. So.
Great. So that's mycoreintentions.com. And I'm going to download that book too. I'm really interested to see what you've written there. Can't wait to read it.
Yeah.
So if nobody else has any other questions, I want to thank you so much, Mike, for being here. Oh, can you please put the link in that? Yes, there we go. Michael Matthew, he's always on it. Thanks, buddy. He posted the link. And everybody, Melanie says, thanks for the book. Oh, Ginny has a question. You're almost off the hook, Mike, but Ginny, what have you got?
Hi, Mike. Nice to meet you. Pretty incredible story and journey. I can imagine all the stresses of everything leading up to you going in jail. Can't imagine that, actually. But yeah, pardon?
Neither could I.
Oh, yeah, I bet. Since we have you here, I know that you had mentioned as far as in multifamily, you want to have more money in reserves. I think you might have just answered it, but just to confirm, would you suggest a couple things, maybe raising a bit more capital? And if so, what percent? Or in the end, like your cash on cash flow, you would just hold back a little bit for the investors and sort of keep it in a reserve? Is that sort of what you were implying?
Yeah. So one of the things that I do is I will make sure I over raise money. So I had an interesting conversation with somebody this week who said that they will put 6 months of reserves on their raise. And I've tried to figure out how to do that, because when you take 6 months of a mortgage payment and 6 months of expenses, and it throws the metrics off on the return that you can provide. That's a big number, right? And so up front, that's a huge number. But if you take a look at what the bank requires, so a typical bank on a note today is going to require somewhere between $250 and $300 a door for reserves. Take that number and put that number up front. So if you have a 100-unit deal and the bank wants $300, times 100 units, you're looking at $30,000. Put that in reserves up front, right? And make sure that stays there, because then you always have that bank reserve too, which is, gives you enough money in case there's a problem. So if you're in a tertiary market and you feel it's a little bit more volatile, you might want to look at raising even more capital than that, or having, or taking a certain, this is the other thing that we looked at this week on a deal was that, hey, if I take $10 a door and I just keep putting that in reserves for the first year over and above what I already have there, it builds that base up. If I'm in a questionable area, I've got some protection. So earlier I kind of alluded to this. I said, hey, there's that spread between, a 10% occupancy rate to where our market fell. So we dropped 30% in occupancies across the board. So I would buy a property that was in the 70s value add, right, was in the 70s, low 80s, re-engineer it, fix it up, drive those values. I'd get it up into the 90s. And when the market changed, I was back down in the 60s and the 70s, right? That 30% decrease in occupancy killed me. So I started to look at it. And, when you're in prison, you got a lot of time to think. And I played with a lot of numbers. And one of the things I looked at was I said, okay, so if I go back in the business, can I raise enough capital by doing this? Can I say that, all right, so if I have a 10% vacancy factor on a deal, but what happens beyond 10%? So I know that I operate well, I can pay this return at a 10% vacancy. Maybe it's 15% vacant, part of it's an economic loss or a bad debt, right? And I have 85% economic income. So if my income's at 85%, I operate well there. But what happens if I drop another 10%? Where does that cash come from to pay my bills? Well, I might have to overraise or put more money in reserves in order to cover that. Not every market's like that. Hey, Chicago might be a market like that. Now, one of the other things that's interesting right now is Chicago and the collar counties around Chicago are changing right now. The rent growth projections for this market for the next couple of years are pretty strong. I actually looked at a deal earlier this year in Mount Prospect. You probably know where that is. And in Mount Prospect, that was a 42 unit deal that today I'm really kind of kicking myself for not buying the deal. We should have bought it. But, you just have to really look at the numbers. So if you know somebody who's a commercial broker where you can get some data either out of CoStar or Reese or Reonomy, and you can go get some reports that will help you look at market metrics in a market that you're in. It'll help you kind of project for the future. Not always correct, but it'll help.
Great. Any other questions? All right. Well, Mike, thanks again for being here. And I love your story. It's very inspiring, and glad you're rebounding and doing all the great stuff that you're doing, and also educating people and teaching them what you've learned so they don't have to go through that. So we just really appreciate you being here for us.
Hey, thanks. I appreciate the opportunity, and hopefully could give a little education and, inspiration. So
we'll definitely keep in touch, and keep me posted on how you're doing with your Tampa project. And one of these days, I actually love coming to Chicago, not so much this time of year, but maybe when it gets closer to summer, I'll come visit, or you come down to Florida. That's actually a pretty smart move for you.
I'm going to be in Florida soon because we're doing another deal. So
good. Well, I'm just down the road. So yeah, if you're in Tampa, I'm actually going to be in Sarasota starting Monday. So
okay. Yeah.
All right. Well, thanks again. And thanks Inner Circle for joining us. Oh, Jenny, did you have another question, or is that a continue?
Yeah, no, actually, what was the password for the for mycoreintentions.com? To download the book. You said there was a password, or
yeah,
we have to put something to type in?
mycoreintentions.com/exit plan.
Oh, that was it. Okay, sorry. I thought you said there was a password that we had to enter.
Yeah, no, just that.
Okay.
Yeah.
Perfect. Okay, that's great. And how do we get a hold of you?
Mike at mycoreintentions.com.
Okay.
And if you want to reach out, I'm more than open to have a conversation. So
great. Okay, thank you.
Yep.
Great. Well, thanks again. I hope you all have a great weekend and stay safe, and we'll see you all soon. Thanks again, Mike.
Perfect. Thanks, Mike. Thanks, everybody.
Take care, everyone.
Bye, everybody.
Bye for now.